Have you ever stopped to think about how these massive global companies manage to pay thousands of people all over the world accurately and on time every single month? The secret is usually a powerful and, yeah, pretty complex system like SAP Payroll. It can feel like a total black box. Well, today, we're going to pry that box open. We're going to follow the digital journey of one employee from day one all the way to that first paycheck and make this whole thing make sense.
So here's our game plan. First, we'll build a digital version of the company. Then, we'll hire our employee into that structure. After that, we'll define when they work and what they get paid. Then comes the main event, running the payroll. And finally, we'll see how that information gets over to the finance team. It's a really logical flow, and by the end, it's all going to click.
Okay, first things first. Before you can hire anyone, before you can pay anyone, you have to build a digital blueprint of the company right inside the system. And this is way more than just a list of office locations. It's a deeply structured model of the entire organization. We start with something called the enterprise structure. The best way to think about this is like the company's legal skeleton. It's the framework that defines all the formal entities and answers those super important questions like, which legal entity is actually cutting the check? Or which office is responsible for the HR administration here? And this structure is hierarchical for a really good reason. You see how everything cascades down? You start at the very top, the client, which is the whole system. That's broken down into company codes, which are basically the separate legal businesses. And those are then divided into personnel areas and sub-areas, which can represent a specific plant or office and control the unique payrolls for that location. This framework is what ensures the right rules get applied to the right people automatically. So if the enterprise structure is that legal skeleton, then the organizational structure, well, that's the company's living, breathing family tree. This part doesn't really care about the legal stuff. It's all about one thing: who reports to whom and how do all the teams and departments actually work together. And the logic here is actually super simple, but it's incredibly powerful. A person holds a position, and that position belongs to an organizational unit. So John Smith is the sales manager, and that job is in the sales department. That simple relationship is the foundation for the entire company hierarchy. It's how the system knows who manages who. So our digital company is officially constructed. The blueprint is in place. Now it's time to actually hire someone and create their digital footprint inside that structure we just built. You have to wonder, right? I mean, think about all the critical, sensitive information a company has on you. Your name, your address, your social security number, your bank account details. Where does all of that live inside a system like this to keep it organized, secure, and ready for payroll? Well, the answer is in something called Infotypes. Now, don't let the technical names scare you. It's honestly just a fancy word for a digital folder. That's it. There's a specific folder for your personal data, a different one for your address, another for your bank details. It's just a really, really organized digital filing cabinet for each employee. And here are just a few of the most important folders. See that very first one? Infotype 0001, Organizational Assignment? That's the one. That is the critical link that connects our brand new employee directly to that company blueprint we built in Section 1. The others, like basic pay and bank details, well, they hold the money info we're definitely going to need later. Okay, so we have a digital employee, and they are officially linked to our digital company. What's the next logical step? We have to define the rules of their job. Specifically, when are they supposed to work, and how much do we pay them for it? This whole process is handled by two more key info types. First, planned working time. That sets their schedule. Are they a standard Monday to Friday, 9 to 5 employee, or something else? Then you have basic pay, which stores their salary or their hourly rate. You absolutely need both of these pieces for the system to understand what a normal paycheck is supposed to look like. Now, to really get how pay is calculated, you have to understand this concept: wage types. Just think of them as every single individual line item you'd see on a payslip. Your salary is a wage type. A bonus is a wage type. Your tax deduction is a wage type. They are the absolute fundamental building blocks of compensation. So you'll have a wage type for your standard salary, a different one for any overtime you work, another one for that sales bonus you earned. And of course, you'll have wage types for deductions like taxes and health insurance. The payroll system is basically just a big engine designed to process all of these different wage types, add up the payments, subtract the deductions, to get to your final take-home pay. All right, the stage is set. We've got the company structure, we've got the employees' data, and we have all the pay details broken down into wage types. Now it's time for the main event, firing up the calculation engine and actually running the payroll. But hold on, before a single number gets crunched, the system uses a critical safety feature, the Payroll Control Record. The best way to think of this is as a master lock for a whole group of employees. Once that payroll run starts, this lock freezes all their relevant data. It ensures that no one can, say, change an employee's salary right in the middle of the calculation. It's all about guaranteeing data consistency. The whole thing is this very controlled cycle. The payroll admin releases the lock, starts the run, and then they check the results very carefully. Now, if they find a mistake, they don't just change the final number. No way. They have to go back to the source, fix the typo in the info type, and then rerun the calculation. Once everything looks perfect, they exit the process and lock that payroll period for good. So that brings up a classic question. What happens when things change after the fact? Let's say a pay raise was approved for last month, but the paperwork was late and it only gets entered into the system today. That payroll period from last month is already closed and locked. So how does that employee get their back pay? Well, this is where a really powerful feature called retroactive accounting comes in. Just like it says here, anytime a change is made that affects a past payroll period, it automatically triggers this process. The system literally goes back in time, recalculates what should have been paid, finds the difference, and then adds or subtracts that amount on the current paycheck. It's how the system ensures you're always paid accurately, even when the data's late. All right, we are in the home stretch. The pay has been calculated correctly, all the retroactive changes have been handled, and employees know what they're getting. The final critical step is to get this information over to the finance department so they can update the company's official financial records. See, the payroll run creates a ton of detailed results for every single employee. But the company's general ledger in the finance system doesn't need all that detail. It needs a high-level, summarized view. So this next process acts as the official bridge, the interface between the human resources system and the financial accounting system. And this bridge is called a posting run. It gathers up all those individual pay results, groups them into summarized financial documents, and then, this is key, it lets an accountant simulate the posting and check everything for accuracy. Once they give it the green light and release the documents, that's it. The data is officially posted to the general ledger, and those payroll expenses become part of the company's official books. And that completes the entire journey, from building that first digital blueprint all the way to finalizing the company's financials. And here's the real takeaway. By structuring all this data so carefully, from the org chart down to every single wage type, the system does way more than just cut a check. It unlocks the ability to ask incredibly powerful questions about the workforce. Questions like, what's our total cost of overtime in the manufacturing division? Or how do our salary costs compare between our New York and London offices? And answering questions like that is where the true strategic value of a system like this really begins.